Hey, it's Clay at claycharter.com. This will be my top 10 stocks as we head into Monday, October 17th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used to help make good decisions as a trader, this will be a video for you. Real quick, a couple of clarifications. Number one, this price you see over here will be changing, and the candlestick right there you see will be moving around. That's because the market's still open for a small amount of time, but I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks, as they're called, represents 30 minutes worth of time. So stock number one here, AGFY. Did this one earlier in the week. Went a little quiet on Thursday, and then today just came roaring out of the gates. Huge volume. Volume has dropped off a little bit, but during this drop off right there, in fact, I probably should have done that with a different color to make it easier to correspond. So during this drop off right here, check out what's been going on with the price. Just sideways consolidation. And as any textbook or any book will tell you, when you see sideways movement, you want to see a drop off in volume, and that's exactly what's going on here. So from a, like I said, volume analysis standpoint, this thing is behaving. You could literally throw it right into a textbook. As far as areas of resistance are concerned, key level to watch is going to be right there up at $1.50. And then as far as supports, you can see a very clear level has also formed right there. So let me change that to green to represent more so a support dynamic, and then maybe make this all easier to see. Let's just make it one single color. We have our resistance, we have our support, we have the big momentum move right here. So let's put our golf hole down here to make it a little bit more visual, and we have a bull pennant pattern. So if you like to play bull pennants, if you like to play stocks down below the $5 mark, here you go. Next one, ATXI. This one had a very, very rough day in the sense of opening 30 minutes was just going very, very well. And then the next 30 minutes, nasty, and down the price went. But what now makes this interesting is the fact that this movement right here, the price is starting to recover. Because at this point, earlier on in the day, when it started to go down and down and down and down and down, it was a very legitimate question. Is this the beginning of the end? Is this thing going to drift back into oblivion? And it still might, but point here is now is at least it becomes rational to say, okay, maybe this downwards move is over because the price has started to go up. Case in point, if the price was still dropping as I talked, and I'm sitting here saying, hey, it's looking like the price is done going down, you would say, wait, that makes literally no sense because the price is still going down. But that's not the case here, right? It has started to go back up. Does that mean it's guaranteed to continue? Of course not. My point here is that it's at least plausible to start to wonder, okay, maybe this turnaround is a signal that this downwards pullback is complete. And the main breakout area in my mind to get any sort of maybe bigger potential bounce back up and maybe retest highs right there at the 350 mark. As far as levels of support are concerned, keep an eye on that former breakout area right there around the $3 mark. But yeah, if you like to play these situations where a stock gets really beat up, but then starts to show some signs of strength, keep an eye on it. Next one, IMRA, and this is a very, very nice chart for one simple reason, and it's this right here. The ability to draw that line. And on that note, I'm not trying to imply that my ability is great or that's a secret discovery. I assure you a lot of people around the world have that ability. In other words, a lot of people are going to be watching that line, and when lots of people are watching the same levels, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movement. So while there are no guarantees in the market, my point here is that is it plausible to think that if the price gets up to that level that a lot of people are watching and then breaks up through it, that break in and of itself could create additional buying pressure? In my mind, that is certainly a more than logical assumption to make. So keep an eye on that. As far as levels of support are concerned, you can see a nice little upwards trend right there. So just because let's try to make this a little bit more proportional and pretty. There we go. And once again, change that to green to represent more so the support part of the pattern. And then you can see, just to make it one symbol color, resistance, support. So you have a wedge. If you want to put that movement in right there, you have yourselves another bull pennant pattern. But pointer being, and to really kind of just oversimplify it, just watch that trend line right there because that's the level that you got to think a lot of other people are watching. Next one here, AMC. And overall, all things considered, especially with how bad the market kind of ultimately turned out to be, held up pretty nicely. Now, that's, again, a matter of perspective. If you're a day trader that bought right there in that opening 30 minutes, then from that reference point, yeah, the price didn't quite hold up very well. But just taking a step back, the price is still nicely up above. Now, this level down here is important at 560, but even if I make it a little bit more of an aggressive area of support right up here at the 592-ish level, the price did a fantastic job of holding above there. So yeah, was today as explosive as it was on Thursday? It wasn't, but I would not say that today was some sort of massive collapse or anything like that. Once again, assuming you care about more so the bigger picture point of view, because yes, the price did collapse quite a bit if you were buying right there at that high. But overall, the chart's hanging in there, which circles back to that main area of resistance still being up there right around that 627 mark. Talked about that previously, and you can see that that was the problem point ultimately this morning during that opening 30 minutes. But all in all, I would say today was a good, healthy move. Next one, NIO, and a rough day, a really bad day. Not necessarily because it was red, but because of just what it suggested. So, I mean, to state the obvious, on Thursday, good solid bounce right there. And then you got the gap up this morning, and then the price started to run, got all the way up there. And then, I mean, check this out. Not only did it go back down to that previous trend line, but it's dropped below the trend line, tried to bounce, but that trend line went right back to acting as resistance and is now continuing to bleed and bleed. So all those gains wiped out. So if you look at the lows from Thursday before that bounce happened, I mean, not only did the price revisit those lows, but it even cracked down below those lows. So that's what I mean by just a very, very bearish day and a very rough day. And as far as levels of support are concerned, we have to go back to the basic question, well, where did the bleeding finally stop today? And that was down there at 1175. So 1175 going to be the key level of support to watch, again, just for the simple reason that's where the price stopped going down. In terms of areas of resistance, two main levels to watch. First one, that trend line, and then that purple line up here, the 50-period moving average. But yeah, overall, a very, very brutal day. Real quickly, I want to take a break and personally invite you to get signed up for this free live online training that I'm offering next week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used as a trader to build consistency, then certainly get signed up for the free training. If you're watching on YouTube, there's a link in the description box. If you're watching on my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you see, then definitely get signed up for the free training. Next one here, AMD, and the price is now approaching a very, very important level. And this is going to be one of those levels that you got to think a lot of people are watching. So once again, not trying to impress you, not trying to imply this is a great discovery. So it does potentially have that self-fulfilling prophecy attribute with it. But right here at $56, check out 56 through the history of things. $56, generally speaking, held as support. Bounced directly off it. Generally speaking, held as support. And then you fast forward here. Generally speaking, is holding as support, which brings about the big question, is that level going to continue to hold? You know that there's going to be shorts saying, you know what? If this level fails, it's time to get short because that's going to create a cascade to the downside. I understand their logic. There's also going to be long saying, well, I mean, it's bounced from there several times before, so I'm thinking it might get another bounce. I completely see their logic, but that's why risk management is so important, because somebody's going to be right, somebody's going to be wrong. But the core here is that the underlying dynamic is the fact that $56 is a very, very interesting level. Now, if the price does bounce, then the key level of resistance to watch will then be that purple line there, 50-period moving average, which you can see has already rejected the price right there. In the event the price drops to the downside, the next key level is simply going to be down there right around the $55 mark, which is where the price bottomed out on Thursday. But like I said, case in point here, key dynamic, $56. So let's see how the price behaves with it. Next one here, AAPL, Apple, and same general idea. So I'm going to go through this quickly because I don't want to sit here and repeat myself. But like AMD, Apple's also got one of these levels that a whole lot of people are going to be watching, and so far so good. But for for AAPL, it is that 138 mark. So if the price can hold above there, fantastic. But you're going to have shorts looking for a potential move to the downside. You're going to have those longs looking for the bounce. Risk management matters, as I said. But yeah, for Apple, same general premise that we just talked about for AMD. The only difference being that level being at the $138 mark. Next one here, TSLA, Tesla, and I should have put this one at a different location right after NIO because same general idea. A terrible day for Tesla, not because it was red, but because think about where the lows were on Thursday, which were right there before the big, huge bounce. And then you got the gap up this morning. The price went all the way up there. And then like NIO, not only did Tesla come down and revisit those lows, it broke down below them. So just an absolutely brutal day here for Tesla. And you got to think that the shorts are going to be just that much more interested in it after showing such a big sign of weakness. Now, in the event there are any sort of bounces, key level to continue to watch is going to be that purple line there, 50-period moving average, right now valid at, we'll call it 215.60. And then as far as levels of support are concerned, as you're seeing here, it has been a very, very, very long time since the price has been down around this area, with the next level of support being, oh, wow, it's even below there. Is it really down below the May level? Wow. Okay. I didn't realize that it got that bad. All right, let's go to the daily time frame. Okay, we're going to change time frames quick. All right, here we are on the daily time frame. Just meaning each one of these now represents an entire day. Holy smokes. Okay, right here. Let's see, what is that? 197. So 197 going to be the next key area of support moving forward. I'll go back to the 30-minute now that we've identified that, and we can zoom back in here. So 197, next level of support. But yes, if there are any sort of resistances, as I said, keep an eye on that purple line there. But yeah, I didn't realize it was actually that bad. But yeah, Tesla looking very, very weak. Going to keep this one very brief too, because same general idea as Tesla. Brutal day, not because it was red, but because you had these lows right here on Thursday where it bottomed, big bounce, and then like Tesla, like NIO, has come down there and wiped away all those gains and has now gone even lower. So where is the next level of support? This one is not as bad as Tesla in the sense of, Tesla's now at lows that have not been seen for a very long time. But the next potential area of support for this one, right down here at $7.42. So keep an eye on $7.42. If there are any sort of bounces to the upside, key level of resistance to keep an eye on, going to be right here at $7.70. But yeah, another brutal day here for PLTR. Next one, TQQQ, which is an ETF that allows you to make money when the QQQ, the NASDAQ market, goes up. It just allows you to get involved at a lower price point. And because the Qs, Qs being QQQ, really dropped down quite a bit, this one is also showing some signs of weakness. But there's still a chance to build some higher bases, which in my mind, that is why this level here at 1725 is very, very important. I'm not saying this will occur, but if the price comes down to 1725 and breaks down through there, what is that doing to the price? That's essentially putting the price right back to where it was. And not to insult your intelligence, but price movements with genuine power are going to show signs of progress. They're not going to go back to where they were. So maybe the price does come down there, bounces around, and then goes up and does something like that. What are you going to have in this situation? Well, here you'd have a set of lows there. You'd have those lows, and if you envision those as stair-steps, you would still have stair-steps progressing in the upwards direction, and that's the name of the game. That's what a genuinely strong move is going to do. But yeah, breaking down below 1725 is starting to put the price essentially right back to where everything started, just not a sign of genuine strength at all. So that wraps up the top 10. Again, real quick, if you like what you saw here, then I want you to get signed up for the training next week. It'll be Thursday, October 20th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 lists are concerned, if you enjoy these videos, hit that like button, leave a simple comment down below. Thanks for watching. Take care, everybody. Have a good one, and get signed up for that training.